Deven, you think PV Balaji is the right one? Domestically, of course, what he was handed over when Tata Motors was looked at in a very, very different light. He's clearly turned around. They're growing now, their PV segment so much more. The CV business as well, of course, has fired, all engines. And JLR, which was, I guess, the only challenging piece in the entire Tata Motors bouquet. Who better than him himself to actually, helm that?
Yes, Ash, absolutely. I think the proven material as far as the turnaround story is concerned. Systematically, I think this restructured Tata Motors, particularly on a cost structure, and I think brought each and every unit into profit. I think so. Certainly, it is a good thing to probably expect from him to go to JLR and probably I think deliver in a similar manner or relatively better manner. Given the fact that the challenges are new, in JLR portfolio itself, Jaguar is going to be all electric, I think, from this year onwards. And slowly and gradually, Land Rovers also would be becoming the electric, I think, in the next 3 to 5 years from now. And along with that, I think you have the domestic portfolio of Tata Motors, I think, where probably I think we are also going to be seeing a similar approach. But here, I think this experience of turning around Tata Motors financials, I think, would definitely help. In fact, if one looks at, I think, Mahindra & Mahindra's experience, I think, of putting in the MD and CEO as Anish Shah, I think it also proves the fact that I think from a CFO to CEO journey, I think one is definitely, I think, taking care of the financials at the core and creating the business at large. So in that sense, I believe that I think it should be a good choice, and maybe I think it will deliver better results going forward for Tata Motors, as well as I think JLR, of course, for which he's been designated as CEO now.
The other piece of news, Deven, that I wanted to address with you also is Paytm now. Now that, Antfin is going to offload its entire stake in Paytm, it is coming at a discount of 6% to the current market price. So sure enough, on open, perhaps the stock will be weak. But do you think that weakness will get bought into? Or should it be really bought into is the question, given the, trajectory that we've seen from Paytm now at almost touching 1100 actually?
In my viewpoint, I think financial investors who are basically now riding this particular story largely, I think they will have to make sure that I think this company has a strong backbone in form of, I think, the strong product lines. Today, they are actually having a technology platform at the front and on which I think they're driving this entire business. And maybe the kind of turnaround that we are talking about is only on that aspect. I think the main key would be that how they necessarily integrate themselves with the backbone of banking, for example, or backbone of Investec, for example. I think if they integrate themselves well with them, then possibly I think this company has a larger clarity to offer going forward. Pure technology platform, I'm not so optimistic about the credentials and the potentials of the company going forward.
So that's a take on Paytm fundamentally. But Sharon, what about Paytm on the charts? How is that shaping up to be? Because last 1 month itself, Paytm as a stock is up more than 17%. So we've seen quite some quick moves coming in on the chart. Tell us if this looks sustainable going ahead.
So Snehi, you are absolutely right. I think the stock has rallied from that 660 odd mark to 1100, and a lot of people has missed out on this rally, and actually they were saying we missed this stock. I actually check stocks which fundamentally have a change in their financial. This has become from a loss-making company to a profit-making company, and I think the profits will even go up further in the coming quarters. I think this stock has become a buy on dip stock, so this 6% kind of discount will easily bought into. So it's at opening, you can actually see a open low kind of candle, and the stock can be bought back in, and it can even come back to its original 1100 kind of level post the opening. So the stock is definitely a buy on dips from my side. I don't think it'll even break its 20-day EMA levels, which comes around 1030 odd levels. Definitely a 6% discount is not that much. A lot of companies are coming with much bigger discounts, around 10%, 12%. On that basis, I think it is not that kind of negative news, and the stock is absolutely a buy on dips.
Okay, a buy on dips, that's the call on Paytm. There's BEML as well, which is one that's sizable 282 crore rupee order. They've signed an MOU as well for Hyperloop or rather high-speed transport solutions. So that's going to be another stock which is going to be perhaps in the green. The telecom sector too, the Department of Telecom has cut the security test evaluation fee by a good 95%. The beneficiaries are not just going to be telecom players, but also telecom infrastructure as a segment too. And then Bosch, which has had a very strong Q1 as well. Of course, there's that one-time gain, which has boosted the, the path, but Bosch definitely is going to be one stock which is going to be on our radar too. But Deven, just wanted your thoughts on the entire defense pack. I mean, yesterday it was BEL, today perhaps it's going to be BEML. But again, when you come back and draw down to valuations, it begins, becomes a big question mark on whether you look to add positions right now or not.
I think most of the companies are today quoting at FY28 results. Actually, I think on a growth rate, it has achieved. So frankly, I think the valuations are everything in this particular market today. And I believe that I think headroom comparatively is less. Of course, I think the positive news will drive the stock price in between. That is not a question. But if one is talking about the larger play, and I think talking about, growing the wealth in a systematic manner, probably I think the buying should happen maybe at a corrected price level. At this point of time, according to me, I think it's all priced in, and the valuations are remaining at a fairly elevated level.
All right, that's about the defense pack. But Deven, what's your take coming in on Aurobindo Pharma? The company did come out with its earnings and not an impressive set this time around, and especially the margin performance, wherein for select companies, be it Reddy's or Cipla, we have seen that outperformance in the margins, and hence it was taken very nicely by the markets as well. But Aurobindo Pharma, a clear disappointment from the numbers. How do you believe that the stock will react, and what's your overall sense coming in on the pharma pack?
So our overall understanding of the pharma is the companies which are in the specialty generics, complex generics, novel discovery deliveries of pharma products. I think they are the ones who are likely to command the premium in the market for their products. And that's where probably you can put Sun, Cipla, TRL in that particular category. So they are driving this business, I think, on one side. On the other side, the contract research manufacturing, the API-based businesses of Laurus and DVs, I think particularly, they are driving this particular business. So I think we remain in a very niche manner as far as the pharma presence is concerned in our portfolio. We probably, do not like to deal into the companies which are, pure generics, and they have probably significantly large amount of the pricing pressure in between every now and then. So we stay away from that. Just remain very focused on few companies.
Away from pharma and continue to be stock selective, stock specific there. But Deven, what's your take on metals? Because given the kind of moves we've seen in Nifty Metal yesterday, select steel stocks have done very well for themselves. The dollar index also has slightly receded from those 100 levels. What's your take on how metals could continue to perform going ahead?
In fact, the commodity metals, should be very, very strong going forward in this current year as well as next calendar year. Because we believe that the overall demand scenario in the global market is expected to improve. And when it improves not linearly. It improves leaps and bounds. So in my viewpoint, this is where probably one should focus very strongly on the metals. On the other side, the energy costs remaining under control now, and many of the companies are also having the portfolio of renewable energy. So obviously the blended cost of energy for them is now coming down and is likely to come down in the next 3 to 5 years. Given this structural change happening and given the kind of demand scenario which is emerging, we believe that there is a case for remaining extremely strong on the metal as a commodity. And some of the metal companies, ferrous, non-ferrous, both included, I believe will have relatively better run in the market going forward. So selectively buying into the portfolio is definitely requires to be considered.
Just looking at DLF's performance as well and how their, Q1 has been, because as per the ET Now estimates, it's largely been an inline set. Of course, the strong growth, higher occupancy rates, all of that has driven the performance higher for DLF. But for now, Deven, does it look like realty as a pack is priced to perfection, or do you think there is still scope for these stocks to move up?
They will have the ability to, I think, drive up the stock price, not an issue. However, I think this is near term, then everything is priced in. Maybe if you are willing to wait for another 2 years before getting, I think, a right kind of appreciation in your portfolio, then I think the stocks could reward you after 2 years. I think today they're pricing in everything for 27, 28 kind of financial year. So not an easy option to buy them into the portfolio, particularly when you see that there are some amount of ups and downs happening due to the quarterly accountings of the projects. And that's why probably I think we would like to buy the real estate companies in the portfolio only when the market gives a price correction. That would be getting a better opportunity at such point of time.
All right, that's the take coming in on the DLF. But along with that, Deven, any specific take on Escorts? Because the company did come out with a good set of earnings rather, but the brokerages feel that the upside from these levels is quite limited. What's your overall sense on Escorts?
I think by and large the story is same. In most of the companies' case, I think the earnings are coming up to the mark and the market is already priced in, market is already discounted in. So from a perspective of looking at the appreciation in the stock, I think we don't have immediate opportunity to, I think, get the appreciation. Do agree that I think going forward the business is going to remain, I think, stronger, even indicated by Mahindra and Mahindra. So from that perspective, I think we do believe that I think the business conditions are remaining favorable. Maybe unless the price correction takes place, I think one is not very confident of buying the stock into the portfolio. So we'll have to wait for some time. In fact, I think the better option would be some of the good quality ancillaries, auto ancillaries. They are really, I think, available at a corrected price, and that's where I think probably one can keep an eye on adding them into the portfolio.
Preferred list there, Deven, when you talk about auto ancs?
Sorry?
Do you have a preferred list when it comes to auto ancs?
Yes.
Any names you recommend?
Yes, I think we continue to hold position in Bosch and Sundaram group, I think, of companies, but that's a disclaimer part only. However, I think the opportunity remains, I think, good with some of the Minda Corp, Minda, Minda kind of companies, where they have actually, I think, shown a better character of dealing with both the EV as well as ICE segment of vehicles. And I think they are into the product portfolio. The kit value is increasing for them from the OEM side. So we like that kind of underlying story. Fortunately, I think they are not fully appreciated as far as the price is concerned. So maybe I think some opportunities at the upside also is available. So yes, I think this kind of companies can be considered from investment perspective for long term.